Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast. Today's special guest is President and CEO of First Majestic Silver, Keith Neumeyer. Keith is here to talk about the silver market and to talk about his company, First Majestic Silver. Thank you for joining us here today, Keith.
Hi, Jason, and thanks for inviting me.
Welcome, Keith. Now, Keith, you had a great interview that came out a couple months ago with Ron Hare of Hare Research, and you're very candid about the silver market in this interview. So I wanted to ask you more questions about your opinions of the silver market. In 2011, it was a very volatile and rough year for silver investors and silver miners alike. From your firsthand perspective, what do you think of what happened to the silver price in 2011, and do you see similar things for the silver price in 2012?
Well, I sure hope not. Let's cross our fingers that the action we saw in April of 2011 was a one-time event, but it's one of these things that could happen again. And unfortunately, in the metal sector, the precious metal sector, it is very volatile, and we see these major gyrations in price due to all the different financial instruments that are out there, and it's hard to really explain, what happens to your average investor and why these movements do take place, because these movements don't have anything to do with the supply demand of the metal. And you can't tell me when silver's off $5 or $6 in a matter of a couple of days that all of a sudden the demand for the metal decreased by that percentage over that period of time. It had nothing to do with that. And it's unfortunate, that we are in the environment that we're in, but, we can't really change it. It's just part of the system that we have, our financial system that we all live within, and we have to try to work within that system.
Yeah, that's very interesting, Keith. And I think one of the problems that you touched on a little bit, and to get into a little bit more detail, is that there's over 100 ounces of paper silver for every real ounce of physical silver that miners like you and others produce. So this creates a lot of unnecessary volatility in the market because you have, a lot of these leveraged longs, these speculators. And I mean, there's a place in markets for speculators, but we just have way too much speculation and way too much leverage in the silver market.
Well, I think that 100 to 1 is understated, actually. I think it's a much bigger a number than that. If you look at how much silver trades in a day, it's approximately a billion ounces of silver trades worldwide in all the exchanges in a single day, yet 900 million ounces of silver is consumed every year, of which about 650 or 700,000 or 700 million, 650 to 700 million ounces are coming from mining companies, so the balance is coming from other sources like recycling and hoards, investors, and so on and so forth. So to me, that's 365 to 1.
Wow. And it's really tough to come up with a price target for 2012 and beyond for the paper price of silver because of the dislocation that I'm seeing between the paper price of silver and the real price of silver. Would you agree with that statement?
Oh, absolutely. And that's why, when I'm asked the question, what do I think silver prices are going to be a year from now or a month from now, it's so difficult to answer the question because, in a true supply-demand environment, if we are in such an environment, we know that the demand for the metal is at highs that has never been seen before with all the technologies and consumption of silver on the industrial side as well as the investment side. The ETFs, you name it, the consumption is extremely high. Yet, the prices haven't gone as high as they should if, in fact, we weren't in the environment that we're in today. So even though I'm very positive on the future of the silver price, because I do think that these financial instruments are slowly being unwound, it takes a very long time to have a major price move.
Yeah, I agree. And one of the ways that Eric Sprott brought up that some of the silver producers can counter some of this, and he wrote about this in his call to action paper, is that other silver producers should start stockpiling some of their silver production in inventory, or they should hold some of it back if they think the paper price has dropped. I was wondering about your opinion on that, and if First Majestic Silver has already started that, like some other silver producers have already said they've started doing, or if First Majestic Silver is not planning on doing that in the future.
Well, it's I think maybe it's not common knowledge. I was just going to say it's common knowledge, but I'm actually not certain of that. But we were the only buyer in the PSLV mining company. I mean, the First Majestic Silver was the only mining company that participated in Sprott's recent silver ETF that they sold a couple of weeks back, and we're very proud to be the only mining company. But I sent emails out to the CEOs of at least half a dozen other silver producers, which I'm not going to name names. They know who they are, and I asked each one of them to make an investment in the PSLV. To my surprise, not one of them did, except First Majestic. So I was quite shocked. I thought, with the amount of cash in some of the treasuries of these public companies, silver mining companies, that they should have at least allocated some of their cash to this cause. I guess they felt differently. We also are long silver, not only in the PSLV, but we also own 1 million ounces of silver in the futures market, which we bought last year, and we've carried for the last, I guess about 4 months now, 4 or 5 months maybe. And we continue to support silver and the silver price.
Yeah, and you talked about the free cash flow generation in the silver mining sector, and it's also happening in the gold mining sector. There's just a record amount of free cash flow generation. The oil prices have basically stabilized. Oil's in a trading range for the most part right now, barring something drastic happening in Iran. Can you talk about the free cash flow generation potential of the silver producers and the gold producers going forward?
Well, I can't speak specifically of companies outside of First Majestic, but the mining sector has been underwater for a long time, and over the last 10 years, we've had I think the longest running bull market, at least in my lifetime, and I don't see any end to that. And as a result, you're seeing treasuries explode, among many mining companies, and this money will be deployed in many different areas, improving operations and improving communities and improving the way mining companies do business and acquisitions and consolidation and so on. So it's not unlike some of the big high tech companies who've been profitable for years, who are sitting on hordes and hordes of cash. Now, this bull market has lasted as long as the high tech cycle has. So we're not experiencing treasuries of that magnitude. But if we go on for another 10 or 15 years of this bull market, I think it's going to be very good for this sector. And this money that is being accumulated by these mining companies will be used for very good purposes.
Yeah, I think that's a very good point. And I expect this long-term secular bull market to last as long as real interest rates stay negative, and as long as people are not going to get paid a substantial amount on their savings. I'm seeing gold and silver definitely be remonetized. Now, I want to transition here to talk about your company specifically, because First Majestic Silver is one of my favorite producers out there, and it's a stock I got in below $4 a share, and I want to get our listeners more familiar with the company about some of the specifics. So can you talk about some of the near-term growth catalysts that First Majestic has coming in the next 24 months or so?
Yeah, absolutely. The company continues to grow, and we've just completed our 8th record year of growth, and we don't see that going backwards anytime soon. At least for the next 5 years, we expect continued growth, and hopefully beyond that. Obviously there's some acquisitions potential that might even accelerate our growth, but just with the current portfolio that we have today, we don't see any end in sight of our growth. And we've got not only 2 other assets, we've got 3 producing mines now, but we've got 2 other assets that will become mines, we believe. One is currently under construction, called the Del Toro Silver Mine, and there's one that's under permitting called the Luce Silver Project. And with both those mines coming on stream over the next few years, will exceed 16 million ounces of production in 2014, and even grow beyond that. So that's substantial growth from current levels of around this year about 8.5 million ounces.
Yeah, that's very exciting. And I know you guys came out with an expanded mine production plan for Del Toro, and the market, a lot of the other analysts didn't add the production growth plans into their valuations yet. So I think for our listeners out there, I think that's something for people to do more due diligence on. I think there's a lot of value in your stock as well as some nice growth.
Yeah, it's partly our fault as well because they're waiting for some guidance from us, and just because you double the size of the mill doesn't mean you're going to be doubling your production. And we've been very clear to investors that just because we're expanding that operation bigger than what we originally thought it would be, don't jump to conclusions and think that all of a sudden the production there is going to double because at current metal prices, we're able to mine much lower grade ore, and so we can have much higher throughput. And of course, you do get more silver out of the ground, but it's not a doubling effect just because the mill in itself doubles. So the market's waiting for that guidance from us, and we're pushing all our technical staff as much as we can to get all this detail out. But it's quite a moving target, as you can imagine, with 5 drill rigs going and all the development that's going on there and all the construction. You have to draw a line in the sand and say, okay, stop. This is where we're going to do our calculations. And it's just such an exciting asset that we just haven't drawn that line in the sand yet.
Yeah, and, you guys have done what you've said. Other management teams in the sector have not done what they've said. I think that's very important. And when a management team does what it says and executes the business plan, executes the growth strategy, it creates shareholder loyalty because, you guys are adding value there. And I think that's what makes a big difference between owning, the shares of a silver mining company and owning silver bullion. I wanted to ask you your opinion. What competitive advantages do you think First Majestic Silver has over other competing silver miners?
Well, I think it's more than one thing. I think, first off, when looking at an investment of any kind, I think the first thing you have to look at is management. And, First Majestic, even though in the beginning, 6, 7, 8 years ago, I was very confident in management and I felt we had the strongest technical team and management skill set there is in silver mining sector in Mexico. It took a while for the market to really understand that and believe what I believed. And, now, in fact, we are very well respected by the market for the things that you've already said. The other is, our growth, our assets. We've got 5 very good assets, and each one of them are capable of even growing beyond current levels. Already we put a 43-101 out on La Pria back in September, and already just in the last 6 months, there's been some significant advances there, and we spent $40 million there last year to expand that operation from 850 tons to 2,000 tons a day, basically doubling its production to a little over 3 million ounces of silver. That's not the end of that operation, expansion-wise. It will be expanded again, looking out a couple of years. And we're having some great success at exploration at San Martin. We're quite pleased with some of the discoveries that we hit last year, and we're putting out also a new 43-101 towards the end of 2012 in San Martin. And La Encantada, there's always interesting things going on there. It's such a high-grade mine, and we just installed a 3rd ball mill, which will be up and running in about 2 to 4 weeks, and that's going to allow us to take more of the mine ore out of the ground versus what we're mining today. So that's going to affect the head grade at the mill and also improve recoveries. So we're looking forward to seeing some improvements in La Encantada. And then of course, you've got Del Toro and La Luz coming on stream. And so, you've got a great group of assets is what I'm trying to get at. And the other thing is the share structure. We've raised money at fairly good prices over the history of the company. We only have a little over 100 million shares outstanding. And that's not too bad for a company that's accomplished what we've accomplished over the last 8 years.
That's a great organic growth profile, and you guys won't be forced then to go out and overpay for an acquisition or dilute your shareholders like you just said. I want to talk about something else that most shareholders in the company have been speaking about. When does First Majestic Silver plan on paying out a dividend in the future to its common shareholders? Has First Majestic Silver looked into the logistics of possibly paying a dividend out in physical silver bullion, say to a shareholder's gold money account, or are you guys just satisfied, like you mentioned earlier in the interview, about continually investing in more of the Sprott Physical Silver Trust?
Okay. Got a few questions there. Yes, we have looked at dividends. So we've actually spent a number of hours in board meetings over the last year and a half discussing dividends, and we decided to postpone dividend payout at least another year. So we're potentially targeting for 2013. That'll depend on silver prices, of course. It'll depend on our capital expenditures. In 2012, we are spending quite a bit of money on investment. We've got a very aggressive exploration program going on. We've got very aggressive development program going on, as well as a construction project at Del Toro, which is obviously a very high capital intensive project. So there's a lot of money going out, and we don't want to be premature by paying out a dividend and having the unfortunate event of potentially silver prices going down, and then all of a sudden us having to pull the dividend away because we haven't finished construction at Del Toro. So what you're going to do a dividend, you want to keep it in place for obviously the long term. So we're not quite ready, but it is something that we're discussing on a regular basis. And your other question regarding silver, paying us dividend as silver price or silver itself, I think it would be logistically very, very difficult to do. You're talking about fractions of ounces, and I think it would be very costly to be able to manage that. I haven't seen any other company successfully do it. I know that shareholders ask to be paid a dividend in metal regularly. We get emails and questions about this frequently, but logistically, I just think it would be an absolute nightmare to manage. I think it would be easier if people want to own physical silver, they can just go and buy the silver with the dividend that we pay them.
Yeah, that's a very good point, Keith. And, one of the worries about, getting cash is that if we do experience a, runaway hyperinflation type event, I think that's what people are worried about. But maybe if you guys see that coming, maybe then you'll adjust your thinking and your policy. But right now I don't see any hyperinflation risk in the near term where, cash is going to be devalued very, very rapidly. Right,
but, you're talking about, maybe days, by the time, we paid out a dividend on April 1st and suppose if you're in a hyperinflationary environment, if you get your money in the bank by April 5th, and you go out and buy silver the next day on April 6th, I suppose in those 6 days you could lose some money because of hyperinflation, but you're talking about a pretty unusual time, and hopefully we don't see hyperinflation like that in North America.
Yeah, I'm hoping we don't see it either, because it's after studying financial history and seeing like looking at the past of Zimbabwe and Argentina and Weimar Republic, it's not something that you want to live through. I have a couple more.
Don't forget, those are countries that didn't have a reserve currency. We are talking about the United States. We are talking about the largest economy in the world, and they do have a reserve currency. So, I think they're quite protected against situations like that. You could see hyperinflation in Greece or Italy or Spain, places like that, because they don't control their own destinies. But I think the United States is a little bit different.
Yeah, I think that's a good point. I think the United States is insulated for at least another couple years because of the world reserve currency status. But if that reserve currency status is taken away or it's reduced into like a IMF SDR, who knows? I have a couple more questions here for you, Keith.
And then you're talking about a one world government, and
exactly, Keith, and that's a discussion for another time or another place.
So let's hope we don't go down that path.
Yeah, I'm hoping we don't go down that path either, because I'm an Austro-libertarian, and I believe people should have limited government. They should be able to do independent things, free media, and stuff like that. And that's not a good possibility of what I see coming, but who knows what's going to happen in the political realm. I was wondering about your opinion about hedging your energy input costs just in case the price of energy skyrockets due to uncontrollable circumstances. We have the stuff that's going on in Iran right now, and, if the U.S. and Israel go in there to invade, we could see a $50 or $60 spike in oil in less than a month. I was wondering how First Majestic would plan to deal with this so it wouldn't affect their profit margins too much.
Well, another thing, we've talked about it, and similar hedging the U.S. dollar or hedging the Mexican peso, hedging energy is no different than that. But we're looking at installing solar panels at our La Quintana operation. I think there's a greater than 50% chance that we'll be putting a solar field there, which will reduce our reliance on diesel by 50%, which will be an enormous benefit to that operation. It's already a low-cost producer, but it'll even be a lower-cost producer. We've been fortunate enough to have metals move, with oil. So when we've seen oil spike, we've also seen, the metal spike. So I would expect the same thing to happen. If we, saw, oil go back up to $140, I'm sure, gold would be approaching $2,000. So, and dragging silver along with it. So, we've always seen the metals improve with the energy costs, and that's our costs have stayed in line with all the other costs, and that's, if you look at our PowerPoint presentation, which is on our website, you see that our costs on a per ounce basis has been pretty stable over the last 4 years, and a lot of people look at that with they go, wow, how do you do that? And it's a matter of just improving the operations, increasing throughput. And just watching our costs very closely. And even during this very high inflationary period of time that we've been in over the last 4 years, we've had stable costs, and we expect that'll continue over the next several years.
I think that's very impressive that you guys have been able to control your input costs like that despite, the volatility in oil prices and the super spike we had in oil a couple of years ago.
That's right.
Okay, well, I have one final question here, and this is just about the silver market in general. As a person that owns a silver mining company or owns and runs a silver mining company, where do you see future demand growth, the demand driver for silver coming from, based on the type of people that buy silver from your company or the suppliers that you sell your silver doré bars to? Do you see that demand growth coming from investor demand or monetary demand or industrial demand?
Well, I think it's a combination of everything. I've said many, many times in my presentation, as we become more reliant on technology as a human race, we become more reliant on silver. I look at silver as not as simply a precious metal. That would suggest to me that it's a currency. I look at silver as a strategic metal. It's actually one of the most important metals that we consume as a human race. And if that silver left our lives tomorrow, our lives would change dramatically for the worse. And, our automobiles wouldn't operate, our cell phones, laptops, many of our appliances, buildings would be boiling on the inside, because of the UV light entering the office buildings. There'd be so many changes. We couldn't simply name them all here in this interview, but silver is very important, and that's why we have historic lows of above ground supplies of silver today, because it is being consumed at an increasing rate, regardless of the slowdown in the economy around the world. Supplies are dwindling. Mine supply isn't increasing to any great degree, and so I look at the commercial consumption of silver as the primary driver. But you do, have the odd ETF. You do have the odd institution out there who goes in and buys physical silver, and the investment side of the silver equation is very important. But I think it's really going to be the commercial applications that are going to be the big driver, because these big commercial users, they don't care if silver is $100 or $150 because they're using such small amounts of it. It's inelastic, so it's just the amount of silver that's in your cell phone. It's not going to break Apple if silver is $35 or $200. It doesn't matter to them.
And those are all great insights, Keith. And to add further to your point there, I think besides you mentioning that silver is a critical metal and that it's being gold and silver both being remonetized as money because silver is the poor man's gold, I'm just seeing silver as the greatest efficiency metal there is out there, because I look at other commodities like rare earths and gold and stuff like that, and I just don't see them creating the efficiency gains that silver does.
Mm-hmm. Oh, it's very true.
Well, in wrapping things up here, Keith, can you please tell our listeners where they can find your company website?
Yeah, it's at www.firstmajestic.com, and we've got our latest presentation there and all the information that anyone could want to see. It's all there, financial information, everything.
I just want to thank you very much for your time here today, Keith, and hopefully we can speak to you again sometime in the near future.
Yeah, that'd be fine, Jason. Thanks for your time.